Hello traders, and welcome back to another video. If you enjoy our content, make sure to like and subscribe, this means a lot for us. In this video I am going to break down all the trades that we took last week, and of course, all of them were shared on premium channel. Let's start with the first trade. It's gold 30-minute time frame. First of all, we need to see the trend direction before considering any trade. On the current time frame, we see clearly a downtrend. Then we zoom in again and mark the supply zone on the left. We mostly trade fresh supply and demand zones. We draw the supply from the lower body to the wick high, but you can draw taking into consideration the full candle. We can see that the lower wick is already mitigated. So, both techniques of drawing the zone work very well. Price tested all the supply and mitigated with the bearish candle on the top of the bearish impulse. So, we had rejection, which means a sell sentiment. We shifted on even lower time frame as 5 minute. We spotted here a double top formation. Below it we have an imbalance zone waiting to be filled by the price. And in the end of it, a demand order block style. We had here two trading opportunities. Selling the double top and buying at demand. We entered after the break of low. It hasn't a great risk reward, but it worthwhile. Price made a pullback and then continued towards the demand zone, reaching in this way our take profit level. Looking at the bearish momentum, that was instead too strong, we decided not to enter a buy trade. Remember that not every supply and demand will work. It's very important to look into the price action and momentum. Price made a little bounce from the bottom edge of demand, but remained in the bearish structure, and as we can see, after retesting the resistance dropped strongly below the demand. Let's move on to the next setup, the Euro versus Japanese Yen. As we did in previous setup, the first step that we do is checking the trend. I will always repeat this sentence to you, so you will not forget it. We are clearly in an uptrend, and the recommended and high probability is to look for bullish setup. We have highlighted the trading sessions. The Asian range has a major role and influence on the following sessions as the London and the New York session. We can see here a fake out below the Asian range during the London session. This was a huge spike, maybe from a released news. This is a bullish pattern. After a fake out we expect a continuation above the Asia range. In this moment we had the New York session open, and we expect more volume in the market. This is why we entered a buy trade targeting the London high and above. Price made a small drop, about 50% of our stop loss, and then bounce in upside direction, creating a new high. In this moment we closed 50% of the position and moved the stop loss to break even. Price reversed and hit our new adjusted stop loss. Managing the trade is very important. Floating profits means nothing till the moment that we close them. Price bounced again in upside direction, reaching the initial target. So, in overall, we profited from this setup, not to the fullest potential, but relatively okay. Next setup was US 30 index. It was our major setup last week, and I am very sure that you are going to like it because it combines different concepts. First of all, let's check the trend. We had a bullish trend that is changing, ready to reverts. How we know that? We had a break of last higher low, and second of all, the break of trend line. For quite some time actually we haven't used the trend line very often. But this remained additional confirmation for the reversal. In this moment we saw a fake out below the Asian range, and after this event we strongly expect a pullback to begin. We have highlighted two zones, supply zones, which price has higher probability to reverse. After the break of last higher low, the pullback has a huge range to be completed, and sometime, even above the higher high, but as we known, the Forex is a probability game, and our entry will be placed on the zones that has most chances to work. Price pullback slowly. This is a big plus, because most of the times a sharp pullback with huge green candle, can break out outside the zone easily and stop us out. So, have a closer look at pullback structure. Price reached the first supply and paused, with some rejection. In this moment is recommended to enter a sell trade. The timing of our entry was very precise, because sometimes price stays in consolidation for a longer period of time, and this causes frustration towards our position. This wasn't the case. After a strong drop, I moved stop loss to break-even, and closed 50% of the position. We expected pullback and mitigation of the lower wick of the bull candle. Our break-even was above this level, so, theoretically we were safe. But the market has its own plans, and stopped the rest of our position at break-even. Price touched the second supply zone, our next potential entry level. After the rejection I decided to enter again a sell trade. Right after that, the price made another small impulse against us, but slowly reversed on our trade direction. Price made a pullback, and we saw additional opportunity to join the bearish move. The move finished at demand zone below, as we expected. The last setup failed, was a losing trade. Let's examine to find out our mistake, and fix it for the future situations. We have here US dollar Swiss franc, 15-minute time frame. We noticed here a downtrend, but as we can see it has slowed down and is more in accumulation phase, moving in a range. We noticed a supply zone and price rejection. The cons on this setup was the supply zone itself, because wasn't a fresh one. Price has touched previously 2 times. During the third touch price tested all the zone and consolidated for a while, creating in this way a new base, and consequently creating a new supply. We decided to enter at pullback, and for our final target, we used the Fibonacci extension. Price touched our entry, made a small rejection, and went sharply in upside direction, stopping us out. Do not forget, losses are part of the trading journey. Don't be scared of them, but learn to improve on every trade at the time. Thanks for watching the video till the end. Make sure to like and subscribe.